There's one trading strategy that I use every single day. It's incredibly simple. It only has two rules and it's allowed me to have days like this, and like this. So by the end of this video, you will have the exact strategy that I use to make over $10,000 per month as a day trader. Let's go. So like I said before, this strategy is insanely simple and it only revolves around two rules. But the first thing we need to do is actually set up the strategy properly. So head over to TradingView and go over to your indicators tab. Now we're going to add VWAP, also known as volume weighted average price. Add that to your chart. Now, this is going to be a custom indicator. So it's not going to be exactly what it looks like here, which is going to be default what it looks like. So what we need to do is we need to go over to the settings of this indicator, which is going to be this settings button right here. What we're going to do is we're going to make this a lot more simple because I don't like to have all of these lines and all of these, clouds in the middle. I want to make sure that it's just one simple line. So we're going to go over here and we're going to disable upper band 1, lower band 1, and bands fill 1. This will leave you with just a blue line. So this indicator is very similar to a moving average. And so what a moving average is essentially it tells you exactly what the price action looks like throughout the day. But this is going to include the volume of the market as well. So as you can see here, on a move like this where we have a sharp move down, we're going to see a steeper VWAP line. So the steeper the VWAP line means the more volume that's picking up throughout the market. So for example, here where we see a steep decline in VWAP, we're seeing a massive move in price versus at a time like this where movement is kind of just moving like this, we're seeing a very, very flat VWAP line, right? So whenever you see price action moving very slowly, you're going to see a flat VWAP line. When you see a massive, massive move in the market, you're going to see a steep VWAP line. This is going to be very important. That's why I'm telling you now. Okay, so now that we have our VWAP set up, we have two main rules for this strategy. So the first thing I'm going to do is I'm going to show you these rules and break down exactly what these rules look like. That way you know exactly what you're supposed to do and what you're supposed to be looking for when actually taking a trade using this strategy. But then after that, I'm going to break down an actual real entry system using this indicator. And it's basically going to be from start to finish. I'm going to show you everything that you need to see. So rule number 1 is going to be never trade when VWAP is flat. The reason being, we want to make sure that we are always trading within a trend, right? We want to trade within a trend and we want to make sure that we're trading with volume. So as you can see here, to catch massive moves, we're going to make sure that we are never trading when VWAP is at this flat area here. If you see a flat VWAP line, do not take a trade in that area because all you're going to do is get caught up in chop and sideways price action. It's very, very difficult to navigate. And so what I mean by this is people end up in situations like this where they get caught trying to take trades back and forth inside of this sideways price action. And all it does is destroy you. So what we're going to do is we're going to stay away from a flat VWAP line. Another mini rule, it's not really like 100% a guaranteed rule, but another mini rule that we want to follow is to make sure that we're taking trades when price is actually at VWAP and not extremely far away from VWAP. And the reason why I say that is because price will tend to actually rubber band back down to VWAP. So if you end up taking a position all the way down here, right? You end up taking a position down here for shorts, thinking that we're going to continue further down. You have to identify how far away we are from VWAP in the first place, right? Because what's bound to happen is we're going to see a move all the way back up to this VWAP area here just for us to come right back down. So be very careful and make sure you're only taking trades when we're actually at VWAP. So here's another example of what I mean by that. If you ended up taking a short here at this point, thinking it's going to go lower, you're just going to get burned because this price is going to come all the way back up to this VWAP area. So instead, we want to be taking positions at the VWAP line. And this way you'll be able to set yourself up for moves instead of trying to get in chasing an extremely oversold or overbought move, right? So that's another like mini rule, but we got to go on to rule number 2. And that rule is going to be to make sure that you are taking calls or longs above VWAP and puts or shorts below VWAP. So if we're above the VWAP line, there's no reason why you should be taking shorts. So for example here, if we are entering on a position at this VWAP area and we have just broken to the downside of VWAP, there's no reason why we should be taking a long at this point because we know that since VWAP is what's helping us identify trend pretty often, if we end up taking a long here, we know that we're already breaking and holding below the VWAP, so we're just setting ourselves up for failure at this point. Instead, what you want to do is make sure that you are taking a position in the direction of VWAP and allowing that position to continue moving with the trend and with volume. So I'll give you two more examples here, right? So if you can see right now on this chart, you can see that we're breaking VWAP to the upside right here. There's no reason why you should be going short at this point, because you're just going to get stopped out at any point in time here because you're not trading with the trend. Versus at this point, when we break VWAP to the downside, there is no reason why you should be taking a long in this scenario because we're breaking VWAP to the downside. So what we need to be doing is making sure that we're trading with the direction of VWAP. And so what I mean by that is, well, we are coming up here, breaking VWAP, and we want to trade with that direction. Here you can see we're coming down, breaking VWAP, and we want to trade with that direction. But there is a way that we need to actually structure our trades. It can't just be every time we break VWAP because, as you can see, sometimes it fails. Okay, so now that you know how to actually take trades and you know the two main rules when it comes to trading with VWAP, we need to be able to actually structure an entry. Watch this part very, very closely because I'm gonna break down the actual VWAP entry model that will change your trading forever. All right, so this is entry setup number one, which is going to be the liquidity grab. Now, the way that we trade the liquidity grab is very simple. It has an insanely high win rate, but it's actually very, very simple to spot. So like I said before, we're always going to make sure that we are taking trades at the VWAP line, never super far away from it. Like, we don't want to take trades when we're all the way down here below the VWAP line because we know that at one point price is going to rubber band back up to that line. So instead, we want to take trades when we're at VWAP. And so the way that we do that is by doing one main thing, which is going to be utilizing liquidity grabs. So the first step of this strategy is going to make sure that we are in trend. And what I mean by in trend is just take a look at overall trend and make sure that we are forming higher highs or lower lows in the direction that we're supposed to be taking the trade in. So for example, in this scenario, we are making consistent lower highs, lower high, lower high, lower high. So we know for a fact that this trade is most likely going to be a downside position because we are seeing massive downtrend overall in the market as this price action goes on. Right, so now that we know that this is a massive downtrend, we're going to be taking a downside trade. So we're going to be taking a short or a put, depending on what you're trading. I trade both options and futures, so you're going to be taking a short at this point. Now, the second rule, like we already know, it's a mini rule. We want to be at VWAP when we take the trade. That we already know because we're opening at that VWAP area. But the next thing we want to see is a liquidity grab in the other direction. So liquidity is the amount of money that is currently in the market, the amount of liquid capital that is flowing around in the market at all times. So lots of areas are going to have high levels of liquidity. Now, if we talk about an area like this, for example, where we have a sharp move down, there's going to be liquidity left over. People are going to have money that was sitting at this area where, okay, if it comes back up here, then I'll invest to continue that move back down, right? So lots of those liquidity areas are resting in this chart. And so our job is to find out exactly when we tap into those liquidity levels, grab that liquidity, and then continue to the opposite direction. I know that might sound confusing, so I'm going to break it down right now for you. Take a look at this candle here. Large wick to the upside. What does that large wick really mean? Well, the moment that the market opened, we came all the way up here. We climbed all the way up. But within this candle, we were able to see a massive move all the way back down to close below VWAP. And so what do we know based on our rule number 2? It's going to be that we should not take longs if we are below VWAP. So we close below VWAP here. There should be no reason that we take longs at this point. We should not go to the buy side direction because we have just grabbed liquidity and are now looking to continue to that downside move. So when you see that massive wick over and then we see that continuation down, the next thing we should be looking for is a strong continuation candle. What I want to see is a lot of volume being poured into the market that is causing us to then see a continuation past a low, right? So as you can see right here in this scenario, we have a low that is getting broken with a strong amount of volume. So when you enter a position like this, you're going to want to make sure that you have stop losses above VWAP, yes, but we want to also make sure that our stop loss is below or above that previous candle that we traded after, right? So as you can see, this candle just got broken with that strong continuation. So our stop loss is not just going to be right here above VWAP. We want to make sure that our stop loss is above that previous candle. that would be a very, very large invalidating point for us. And so for our target, the main thing you want to do is target the next level of liquidity down, whatever that looks like, right? So now that we have our stops figured out, you have to figure out exactly where to target on a position like this. So what we'll do is we'll scroll out and go to like the 1 hour time frame and find that next big area of liquidity. As you can see in this area, if you guys have watched my order block video, you know that this is a massive order block level. I just realized that I have it on from the rules, but we're going to still use this because I feel like it. So as you can see right here is going to be my liquidity area for my target. And so what I'll do is I'll drop my target all the way down to this order block, and this becomes a very, very nice 3.88 to 1 risk to reward trade. Perfect from start to finish. This is actually a trade I took live with my mentorship. Now that is just the first setup, which is going to be the liquidity grab setup, but there's one more setup that I need to show you. And once you have these 2 setups in your arsenal, you'll basically be able to take any trades on planet Earth every single day, because these setups happen all the time. And this second setup is going to be called the break and retest setup. So we have the liquidity grab setup, but now we need to talk about the break and retest setup, which is just as strong as the liquidity grab. What we're looking for here, the very first thing is always going to be trend, right? So as we can see here, we end up changing character at this point and seeing a massive upside move. So we know that we're in that bullish trend. How do we find out? Well, you can draw those higher highs and lower lows that we talked about earlier. So as you can see, we have our low here. We can see that we end up breaking that structure and creating new highs at this point, new lows, new high, new high, new high, right? So we know that we're in that upside trend. So what we need to see here is first going to be a break of VWAP, right? So the first thing we need to see is going to be trend. And the second thing we need to see is a break in VWAP in the direction of that trend. And so what I mean is we need to break VWAP here, not something like this test right here, but we need to fully break VWAP on the chart for us to be able to start looking at a trade in the direction of trend. Now, what you're most likely going to see after that break, almost guaranteed, is going to be a retest of that VWAP. If you don't see a retest, I personally believe that you should just not take the trade. I am the absolute biggest advocate for do not take a trade unless there is a retest of the level first. So now that we have a retest, all we need to see is a break of that high that we just saw on the retest for us to get in. Super simple. Enter on the break of that high, and your stop loss goes on the other side of that VWAP. But remember what I told you guys on that last one as well. Your stop loss goes below that low, right? You always want to make sure your stop loss is on the other side of that candle. It's not going to just be VWAP, but your stop loss is on the other side of the candle. And all we're going to do is target the next level of liquidity. And of course, for this target, we want to make sure that we target previous levels of liquidity. Here you can see we have this absolute massive move, massive flip to the downside. So this is the area that we'll be targeting. So go back over to that entry, and we're going to target that area right there. And as you can see, this trade ends up being a perfect trade for a 3.7 to 1 risk to reward setup. It's absolutely so insanely simple. And I'll show you another setup that happens literally 15 minutes later. We come down here, we retest, we don't even make it all the way up to VWAP, which is actually a pretty decent sign. And we end up taking that break to the downside. So we can do the exact same thing here. This setup will happen so many times you have no idea. In this scenario, we're going to set it on the other side of this candle here, but we're also going to go above VWAP. And we're going to set our stops, our target down to this area here where we have that liquidity resting from that previous move. And you have 2 setups back to back regarding VWAP with the break and retest model. It is so insanely simple and so insanely powerful at the same time. And just to show you that this break and retest strategy is really that powerful, here we do it again. We break, retest VWAP, and break this high right here. We set our stops below that candle low, and we set our targets for the next level of liquidity up. As you can see, this ends up coming up and tapping into that open high right there. We end up reversing down. Another green trade. Then we do this exact same thing that I cannot believe happens this often. We come down, we break VWAP, we retest again, and then we come through to break lows. And as you can see, we set stop loss on the other side of VWAP at this point. and you set your target down to at least the next level of liquidity, which will be probably this area. Now, if you are able to hold out trades for even longer than just that next area of liquidity, you can see some of these trades be absolutely. So that's why I don't even have to tell you how powerful this strategy is, because when you can catch something like this, it's unreal. And just to show you something even crazier, this position that I just showed you, that massive move that ended up happening, I took this live with my mentorship students for over 400% live trading with them, like I do every single day inside of the Simply Options Academy mentorship program. So for those of you that are struggling, for those of you that feel like they cannot wrap their heads around trading, every single day you're failing, every single day you're blowing up, I know how it feels to be in your shoes. I've done it myself. And so now I've taught over 400 plus students exactly how to trade using this system from start to finish, all literally looking over their shoulder and being a one-on-one mentor for them. So if this is something that you're interested in, I've done this for a lot of people and I've been through all the struggles. I've seen all the struggles. I've helped a lot of people in a lot of different scenarios. So if that sounds like you and you genuinely feel like this might be your shot, go down to the link in the description. It's the first link in the description and apply to join Simply Options Academy. I hope to see you there. Now, with that being said, there is one more thing that you can do to make this even stronger, and that is add one more indicator. And if you can add that indicator and use this system profitably, it will literally change your game forever. So there's going to be a video on the screen that is going to be even better than this one, go even more in detail than this one, and be absolutely perfect. So go watch that video. It's popping up on the screen right now. I'm giving you some time, and thanks for letting me take my 3-month break. I needed it. So I'll see you guys all in a little bit. Adios, everybody. Goodbye.